Type 9.
Good morning, everybody. Welcome back to another breakdown here with the Everyday Growth Advisors pre-market. Hope you are having a good morning, a good weekend, and welcome back. It's a pretty jam-packed week again. Once again, last week we had FOMC plus earnings plus jobs data, and this week we have CPI plus also Friday is going to be Veterans Day, so probably a lot of volatility squeezed into short kind of trading session. I don't think a lot of traders are going to be trading on Friday, even though the market is open. Federal holidays tend to be a very slow week, or rather a slow day in the markets. So yeah, that's some things that you have to also take into mind. We also have stocks like a lot of growth stocks reporting this week. Some amongst the names, let's see, let me pull this up for you guys so you can have a look. We have Palantir, we have Lyft, Mosaic Company, we have, let's see here, Clover Health, never mind, not that one. AMC, Walt Disney, Plug, Lucid, Novavax, SunPower. We have all of these growth names: Roblox, Rivian, TTD. TTD is not really a growth name, but you get what I mean. Win, Beyond Meat. Yeah, a bunch of these. Neo. Yeah, lots of them. So quite a fair amount of names reporting earnings this week. And of course, if you received the newsletter that I sent out on Sunday morning, EST. We have a simple game plan for this week. The bullish pivot for the S&P 500 is 39.50. The bearish pivot is going to be 36.40. That's the line in the sand that will kick this market into either gear. Anything in between is likely to result in a chop. Of course, doesn't mean that we can't trade it. Just means you have to be really, really careful with what you trade. We had a Sunday webinar with the team on Discord and went through extensive opportunities. And there is specifically one sector that we are looking at, and that's financials. So we're hoping that last week's information spills over into this week, where we can use that data to kind of support our bearish or bullish thesis on both of these stocks. And also have a look at the VIX right here, bouncing off nicely at the 23.89, gapped up a little bit over 2% today, 3% at the pre-market. So that is looking interesting so far, but VIX has gapped up and then ran down multiple times throughout the whole of this past 30 days. So not really very, very substantial, like not a huge gap up. But in order for this market to really get volatility back, I would say we need to get back to around 28, 29. And we haven't really seen much of out-the-money hedging so far. So the theory and the thesis still remains that I'm more skewed towards the upside than I am to the downside, especially when mega caps sold off. Bad news came out for Apple in the interim. And the rest of mega caps are doing okay this morning. If you read the newsletter, I mentioned that there was possibly a reversal coming, or a retracement coming, sorry, in the temporary interim for Google, Microsoft, Amazon. That's one of the reasons why we didn't take Apple as a swing trade, because of the news catalysts that are currently serving as a headwind for the stock. And we've been avoiding Apple because it's not really exactly the best opportunity right now in terms of risk to reward ratio. Also this morning, IWM up about 1.35%. So looking interesting for a possible retracement back again. Still in a nice uptrend, bounced in the dual zone last week twice almost, and Nasdaq also with a double bottom almost. We'll see if this actually plays out the way that it will, but move up to 11,200 seems quite fairly possible before another rejection here maybe. So obviously the long-term bearish thesis is still intact, but short-term we might be looking for some reversals on the market to trap some bears. After last week's over-pessimistic view on the market after Powell's comments, I think a lot of people flocked towards taking some puts in short term, and I think a lot of them got trapped. So looking for more of a squeeze or a trade here that might do it for bears to get trapped. Above 38.10 would be a meaningful rally up back into the 3900s to retest again. But if we reject this 38.10 level, then we'll likely come down and retest 36.80 and even 36.40 on the SPX, and that's what we'll be looking for today. As we head into the session and beyond into Wednesday. So CPI numbers will come out, and I'll brief you guys on CPI ahead of CPI. I don't want to muddy the waters on Monday when CPI is not today. So we'll jump into CPI on Wednesday's pre-market stream, and I'll give you guys my my thoughts on that as well. Oh yes, and another thing here is the dollar index that you have to look at as a considerable headwind for the market to go further down. Remember that when the dollar starts to spike, that's when equity purchasing power gets eroded. But right now you're seeing a weakening dollar, which is kind of supporting asset prices, and also this is a runoff effect of multiple geopolitical things happening around the world, especially BOJ intervention, especially the possible optimistic view that China might reopen, which we spoke about on Friday. So definitely quite a few things that are acting as external forces in the market right now. And as I mentioned for the past 1 week, we've been looking at financials as a sector that benefits from interest rate hikes in this environment, as well as a stable sector for continued earnings. Now remember that there are obviously benefits and disadvantages for taking a trade in the financial sector right now. The benefits are higher interest rate net income. Not only that, you have higher margins on interest rate net income since federal funds rates increase, so they get to lend or borrow at higher rates. The negatives are that lesser people take loans, therefore their loan interest starts to decrease. So the margins get better, but then the amount of loans get lower. But in a time like this, when businesses are also starved from capital and the central bank is performing QT by tightening up policy, that might actually cause a reverse effect where people want more loans. So we'll see how this plays out. But right now we're seeing a little bit of optimism in financials, and so as an effect, two stocks that we're looking at for this week are Goldman Sachs and JP Morgan, which are sitting at very, very key pivots here. And Goldman Sachs here with the breakaway gap right at the open, possibly might see a little bit of rally up into 370s before a pullback. Very, very strong uptrend. So obviously you don't want to play this to the upside just yet. You want to rather play the downside trade and see how that we can catch the reversal to the downside. Similar setup here on JP Morgan, and could go up to around 139 or first stop probably around 133 where you see some resistance. So that's two things that we're looking at. I also do like possibly playing some Chinese tech, but I'm a little torn between the decision of playing individual stocks or just going for the entire KWEB index, which is the ETF for the Chinese tech China Internet ETF. So this is still a decision that I'll probably weigh over the week and see how they perform. So yeah, one of the sectors that got really, really murdered last week was cybersecurity, mainly because there's kind of an impression that these stocks are going to underperform in the next quarter or two, or at least a couple of quarters, since Microsoft and Amazon had worse performance in their cloud computing business. So the investors are already starting to flock this ahead of bad earnings. So kind of bad earnings for these stocks are already being priced in at this point. So market is really forward thinking here. It causes, and it really does cause a lot of problems, right? Because the market moves ahead of everything, and it's hard to price in some stuff or know what's priced in sometimes. So yeah, that's pretty much all I have for you guys. You guys have any questions? You want me to break down any tickers this morning? Go ahead, put in the comments. Let me do them for you. What's up, Salim? What's up, Mark? Welcome into the stream. Thank you guys once again for being here, taking out your time. Make sure you hit that subscribe button and like if you can, so that you'll be notified when we go live, especially help the YouTube algorithm push this video out to other users as well. I truly appreciate that. Yeah, go ahead, put your questions, put any tickers you want me to break down right now. I have a couple minutes here. I'm gonna wait to see if you guys need any help. If not, I'm gonna dip out of here and start prepping to get on the Discord to trade live with the team. Once again, if you don't know what we do, we are a online trading school, and we are here to revolutionize the way that you learn, compound, and grow. And I can't wait for next month because we're going to be launching a new course. So more on that in a little bit, maybe in 1 or 2 weeks from now. And yeah, lots of interesting or important things happening in the next month for us. NEO. Okay, let's have a look. So NEO is one of the ones that, to me, looks like it's approaching a very, very close zone for capitulation. Let me just clear this chart up because I'm going to draw it from the beginning. Absolutely looks like it finally has found a little bit of a floor, a temporary floor. And let's see here. There's a dual zone around, I want to say this level here. Let's have a look at where the demand comes in for the stock. Yeah, definitely here. So a bit slimmer though. There we go. That makes more sense. Let's also have a look at where the volume profile is for this. So NEO can definitely come back to $3 at some point if it fails to break out here. This is where interim, it has a big resistance, and above it is going to be $17 to $20, where you'll see the next level where it's likely to find some resistance. 17% move on Friday, but then remember that the stock only moved $1.70. And it looks interesting. I mean, definitely looks like there's a possibility for it to rebound. I do like, let's see how far below the EMAs. Oh, sorry, wrong one. Below the long-term EMAs this is trading. Yeah, it's trading pretty far. I would say a move up into the $14-15 level. It could be possible here. So you're looking at a possible upside here on NEO to go back to the 50 EMA in the long term, the daily chart. And that would really, come back to key level here, 14 to 16. That seems like a very, very normal level for this to come to. Now, $20 is a very key level for Neo. I think that it can go back to 14 to 16 to retest, and then see what it does over there before it makes another move, though. I do like that possibility. So from a volume analysis and long-term trend analysis, I think it found a little bit of a bottom. Especially, ooh, did it close this gap? It didn't really, huh? It had gapped up here a couple times. You can see this. It didn't really close the gap though, so it might actually come back down to close that gap again. See, the gap is around $7.90, and it came down to around $8 or so. I think it looks like a good one to purchase running up to earnings, and then you can sell it right ahead of earnings. That would be my advice on this, or rather my opinion on this. Any other tickers that you guys want me to get done? Geez, its market cap even got really wrecked, Neo. Some of the other things that I was also watching was let me also point out a couple things on the crypto market, because I've been following some of the crypto price action a little bit, and obviously I don't use any indicators for this one because I think it's purely price action driven. But watch Ethereum here. It's been consolidating in a pennant, and I think that if it continues to consolidate, it could break either way. For the upside or downside. It looks more bullish than bearish right now, but you know what? Who knows? And then Dogecoin got pumped by Elon, I think, like last week. I took a small position in it and already cashed out the profits. There's also this shitcoin and Bitcoin. Bitcoin's also in a pennant. I'll show you in a second here if it can load. But actually, Bitcoin's in a wedge. Let me just get to that. Yeah, there we go. So Bitcoin's in a huge wedge, and it's actually broken out of the wedge and is trying to retest it. So that's pretty interesting. Yeah, and I'll be looking for Bitcoin to make a rally if it can, in the coming sessions. We'll see if it can actually get there. All right, well, it's 10:30. Market's open right now. So appreciate you guys taking the time to be here. I don't see any more questions. I don't see any more ticker breakdowns. I'll see you guys back on Wednesday, another pre-market stream. Hope you guys have a great trading session, and make sure you don't overexpose yourself in this market. It's going to be very whipsawy. CPI numbers are likely to also give us more information, but at the same time, I feel like it's going to confuse the market even more. So till then, hang tight, and we'll see you on Wednesday. Peace out, guys, and take care. Bye.